inflation just dropped, gas prices are down, and by now you already know that the Bank of Canada held rates steady at 2.75%. So what gives? I want to show you how this one decision, this pause, ripples through everything. From your mortgage rate to your monthly rent, from how long a home sits on the market, or whether a bidding war even happens. These aren't just numbers from Ottawa. They shape our daily lives here in Calgary too. And that's exactly why I'm making this video. But first, I'm Dawn, and if you find any value in my videos, please like and subscribe. My goal this year is 1,000 subscribers and I'm getting closer. Your support means a lot, so thank you. If you're buying, selling, investing, or just trying to figure out what's going on in the real estate market, you need to understand how these big picture decisions translate into local pressure points. In today's video, I'm going to walk you through why the Bank of Canada didn't cut rates, what stagflation actually means and why it's back in the headlines, how this pause could affect Calgary's housing market, and most importantly, what you can do right now to make smart decisions. Let's get into it. On paper, March inflation came in at just 2.3%, below the expected 2.7%. And the bank's internal estimates suggest April's numbers could fall even further, potentially as low as 1.5%, thanks to lower energy prices and the end of the GST tax break holiday. So you'd think rate cuts were a no-brainer, right? But the bank didn't budge, and here's why. First, it's about what people expect to happen. In Q1, consumer expectations for future inflation jumped from 3% to 3.9%. And when people think prices will go up, they start spending more today to get ahead of those increases. Ironically, that behavior only pushes inflation higher. That's the kind of feedback loop the Bank of Canada wants to avoid, and it's why they are trying to hold the line even as current numbers suggest easing. Second, the inflation dip isn't as deep as it looks. While the headline CPI dropped, 42% of the items in the consumer basket are still rising, more than 3%. So inflation hasn't disappeared, it's just like hiding in the details. And then there's this. Uncertainty, that word that showed up 49 times in the bank's latest monetary policy report, more than during COVID, the 2008 crash, or 9/11. It's not just a buzzword. That's the bank waving a red flag that we are in the most unpredictable economic environment of our generation. So let's talk about a word that hasn't been trendy since the 70s, which is stagflation. It's that nasty combo of high prices with weak or no economic growth. And while inflation is easing, the stag part of the equation is starting to show. Canada's GDP is projected to grow just 1.7% this year, while unemployment has climbed to 6.7%. That's not the combination you want when trying to cool inflation. Ideally, we'd see prices coming down as the economy grows. Instead, growth is stalling, while prices still feel stubborn in key areas like food, shelter, and services. And here's where things get dicey. The Bank of Canada is modeling two very different futures. One, mild tariff world, where we only face existing US tariffs on steel and autos. Growth would dip, then bounce back. Number two, big tariff world, where Canada faces a new 12% export tariff. That scenario includes 4 straight quarters of economic contraction, aka a full-blown recession starting this year. The bank's choice to hold steady isn't a signal that things are fine. It's them keeping dry powder, waiting for the right moment to act. Now, whether Calgary's market shifts in direct response to the Bank of Canada's pause or something that was already in motion, it is happening. In March 2025, home sales dropped nearly 20% year over year. New listings jumped up 30%, and active inventory nearly doubled. Broadly, we're in a seller's market still, but it's softening. And as always, real estate is local. Condos, for example, have moved into balanced territory, while some detached segments are seeing very different stories. Just last weekend, I had clients offer on a home that had been sitting for a couple weeks. Not multiple offers, no frenzy. It was overpriced, and the sellers weren't quite ready to accept that the market has changed. On the flip side, I've got another client shopping in a hot pocket of the city, and anything remotely turnkey is still pulling multiple offers. This shift isn't uniform, but it's definitely here. And the pause from the Bank of Canada, it's not just influencing buyer behavior, it's rippling through seller strategy, investor confidence, and the pace of deals across the board. Let's break down what you can actually do right now, whether you're buying, selling, or investing. If you're buying, don't feel rushed, but stay ready. Economists and the bond market are now pricing in potential rate cuts as early as June or September. If those happen, we could see insured mortgage rates drop to low threes, even possibly high twos, but that's if things just break just right. Some experts are skeptical, so talk to your broker and keep your pre-approval up to date. If you're selling, pricing is everything. Buyers are cautious and preparing more. That doesn't mean you won't get a great result, but the days of 15 offers and 50K over list are on pause. Focus on making your home stand out. It should be extremely clean, kept up well, and priced perfectly. If you're investing, cash flow is king right now. While rental demand remains decent, supply is surging, especially with 150,000 plus new purpose-built rental units in the pipeline. Rents are softening in Calgary and other major cities. Make sure you're running conservative numbers and investing for long-term value, not short-term speculation. By the time you're watching this, we'll know the outcome of the federal election. But in the lead up, a lot of people were pressing pause, waiting to see how it all played out before making any big moves. And that makes sense. Elections create uncertainty. Policies around housing, immigration, interest rates, and taxes can shift depending on who's in power. For many buyers and sellers I've been working with, that meant holding off, whether it was listing a home, making an offer, or moving forward on an investment property. Now that the dust is settled, we're likely to see some of that pent-up activity start to re-enter the market, especially from people who were waiting on clarity before making the next step. This is a pause, not a pivot. The Bank of Canada isn't sending us a signal that everything's fine. They're asking for time. Time to see how trade tension unfolds, time to understand the depth of inflation expectations, time to avoid making a move they might regret. And here in Calgary, our real estate market is already heading towards more balanced conditions. We're seeing fewer sales, more listings, and a shift in leverage. Buyers are no longer in a frenzy, sellers are having to rethink strategy, and investors are trying to figure out what the next 6 to 12 months will look like. But in that pause, there's also opportunity for the informed, the prepared, and the patient. If you've got any questions about how these trends affect your specific real estate goals, you can book a call with me in the link below, where you will also find my buyers and sellers guides. Remember to like and subscribe if you want to see more from me. Thanks so much for watching, and I'll see you soon.